Everybody, what is happening? It's Bill with Franklin Loan Center, and topic that you guys know this is where I always get these topics, but a couple people recently, I've heard some articles, and then I also heard a conversation. I was involved in a conversation where people were saying, well, foreclosures are going to be coming, so don't worry about it. That's where the inventory is going to come from. So it's just like, okay, I mean, let's dig into that a little bit, I guess. And see what's going on. So the most recent report that's kind of the gold standard of foreclosure data, it comes out of the MBA, the Mortgage Bankers Association, and they looked at Q4, so this is getting to be some older data, I guess you could say. It was interesting because it did tick up in particular VA and FHA loans. So the year over year data ticked up 10 basis points, or 0.1% for and that's for the pre-foreclosure or delinquency data. So that's up 0.1%, but the actual foreclosures was up 1 basis point, or 1/100%. So, foreclosures are really kind of generally, I mean, we do need to keep an eye on some of the FHA and VA both allow for much higher, higher loan to value ratios. And then also higher debt to income ratios, and they're a little more lenient on credit score. So it feels like kind of a deadly combination. For what it's worth, VA still has a very low default rate. But these are just the things that are hanging out there. And, I mean, obviously interest rates have been persistently high, blah, 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 right? So it'd be interesting to see, if rates came down, a bunch of these people could refinance and probably turn these numbers right around. But no one can guarantee that yet. But nonetheless, we do have a pretty stable default / foreclosure rate happening. I mean, it's 0.15% of the foreclosure rate right now, which is a very, very historically very low rate, very low compared to anything pre-COVID, blah, 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 right? So anyway, I just think that there are some things we need to watch out for. If unemployment data starts to really or if the unemployment rate really starts to tick up, that will certainly be something to keep an eye on. And again, if rates continue to stay persistently high, not allow people to refinance. Some people are definitely sitting in some, higher debt to income ratios, which means they're just paying more and more, a bigger portion of their total, their total income on a mortgage. That's also problematic. So anyway, for now, is there a flood of foreclosures coming out of that are going to help the inventory? The answer is really no. Yes, there's an uptick in FHA and VA, but FHA is less than 10%. It's just a hair over 10% of the total amount of loans that get done, and so it's not. I mean, even if it is ticking up a bit as a part of the total, it's not that big of a number. So anyway, I don't think we're going to have to, I just don't see a big flood of this coming. I mean, we'll see what happens as we get deeper and deeper into seeing what's happening with the economy and everything. But for now, I don't think that's where it's coming from. So anyway, for all these doomsdayers in real estate, show me the data. And it's just not there yet. So anyway, I am Bill. I'm with Franklin Loan Center, and don't believe the haters. Real estate's probably hanging in there. I'll see y'all next week.